Well, hey there. It's Terry Sawchuk. It's actually Friday, not Thursday. So, in honor of Friday, we're doing 4 Minute Friday today. Wanted to take just an extra minute and go over some of the new economic data. I wouldn't say new, but just economic data that I think has become kind of important. Um, I'm going to start with the US dollar, Japanese yen. You can see that there was a big fall in the strength of the dollar relative to the yen, and that's what spooked everybody. It was the blowing up of the yen carry trade. Um, it did make a little recovery, but now it's starting to head back down a little bit. And so that's something that we're watching closely. There are a lot of, we'll call them talking heads, that suggest that essentially the carnage from the yen carry trade is over. But I don't think that's entirely true. And I've read recently that it's possible it could be spilling over into the UK. And so I think this is important. It reminds me a bit of 2008 and 9 when we got the first it was Bear Stearns, oh, it was fine, no big deal. Then it was Lehman Brothers, and then all hell broke loose. And well, I don't think this is going to be a repeat of 08, 09, because there's things that are different now. But what I do think is that there's some undercurrents that are a little bit concerning, and they may just be getting temporarily swept under the rug. Okay, now that doesn't mean that we're due for an imminent collapse, but my radar is up because, again, the combination of the yen carry trade and that probably not being over, the counterparty risk, the fact that it may be spilling over into the UK, and then on top of all that, you've got the commercial real estate market. We're getting to the point now where the rubber's going to meet the road, and a lot of these upside down buildings, the banks are going to have to deal with. So I think over the next 6 to 18 months, it could be a pretty rocky road. Now, having said that, if you look at the stock market, it's been on a bit of a tear. So if you can see we're right back about to the level. So here's where we were that Sunday before the yen carry trade blew up, and then you can see over the next couple days it bottomed out. And then it's just been a straight up relentless march back about to where we were before. Okay, and so it looks like we've reunited or reignited, I should say, that bullish trend. And so I would look to see how much above 5,600 we get here, and or if we even get to 5,600. The chart looks bullish for now, so I would say that it's likely that this trend is going to continue for a bit, but I do think that it's probably going to run out of steam in the not too distant future. Same thing with the NASDAQ. It's essentially almost identical. The NASDAQ broke through the 200-day moving average for one candle and then bounced off of it. So that's obviously a pretty good sign, and we're watching that pretty closely. But by and large, I think, you got to factor the Fed in too. And the economic data has been decent, right? Decent to good, which it's really difficult to make an argument that there is a recession right now. It's not difficult to make an argument that there's some areas of the economy that look like they're slowing down. The housing data this week came in really weak, weaker than expected. But corporate earnings have, by and large, almost 80% of S&P 500 corporations have met or exceeded their earnings expectations. The guidance was mixed. Some guidance was a little lower, some was a little better. But by and large, the bull market is intact. And I know there's a lot of people that keep telling you that the sky is going to fall, the sky is falling, it's coming. And I've been in that camp at times too. But right now, the data does not support like an economic collapse. Now, the Fed could change all that in Jackson Hole next week if they come out with a more hawkish tone. But to this point, they haven't. I would argue that the economy is in such shape right now that it probably does not call for rate cuts, but we're probably going to get them. And I'm not sure what that's going to mean. This could definitely be one of those scenarios where it's, buy the rumor, sell the news, so that when the Fed starts cutting, because it's been so highly anticipated, it's actually more bearish than bullish. But we'll see. So for now, no changes. We're going to stick to our call that on a short-term basis, it's still bullish. And that we're going to look at the data. There's some things to be potentially concerned about, but they're not right here, right now. But we're watching them very closely. We'll keep you in the loop, I promise. And on that note, I'll talk to you next Thursday, not Friday, on what is normally 3 Minute Thursday.